Wednesday, Wednesday, Wednesday. 5-Minute Finance, new content. Luke, I don't know about you, but with Thanksgiving next week, I have turkey and stuffing on the brain.
Matt, it's funny you say that. We are getting toward the end of the year, and a lot of people are not only thinking about turkey and stuffing, but also stuffing their retirement accounts before year's end.
Ah, yes. Perhaps a pay raise, now allowing for additional cash flow to be contributed, or we always know those looking for the 11th hour tax deductions. Others might very well be thinking that, you know what, this whole stay-at-home quarantine thing hasn't been so bad, and so they're trying to inch up that retirement date. They really want to make sure they're saving enough at that point.
I agree. So go ahead and explain to our at-home audience the difference in contribution limits to various retirement accounts.
All right, well, Luke, it should be noted that all of the limits I'm going to discuss today are for the 2020 tax year. These are subject to change year to year, and more typically than not, we do see the IRS slightly increase these limits each year. Now, that being said, we'll start with what is likely the most popular. We're going to talk 401k plans. Now, when I say 401k plans, from a limit perspective, the same numbers apply to 403b plans as well. We'll talk specific differences between those accounts in another episode. In 2020, you're allowed to make up to $19,500 of contributions to your 401k plan. If you're age 50 or older, you're allowed an additional catch-up contribution of $6,500, bringing your total to $26,000.
Stop right there. My first question, if $19,500 is the total, does my employer's match count towards that number?
Great question, Luke. No. That $19,500 is what you, as the employee, are allowed to contribute. If your employer makes profit-sharing contributions, discretionary contributions, or does offer a matching contribution, that does not apply towards this limit. But the total limit for all contributions for someone under the age of 50 is $57,000 a year. Over age 50 is $63,500 a year. That includes both your contributions and your employer's contributions.
Okay, got it. Thank you.
Now, Luke, something that our audience should be diligent about is that they're actually receiving the full match from their employer. Mostly, this is making sure you're contributing at least the percentage necessary to receive the full match. However, a lesser discussed issue arises for those higher compensated, really good savers. So I'll give you a quick example of a fictitious client. Mrs. Client is 58 years old and she's making $280,000 per year. She's maxing out her 401k, so she's contributing that full $26,000 per year. Her employer is very generous, and as long as Mrs. Client is contributing at least 5%, they're going to contribute 15% of her salary on her behalf. Sounds great, doesn't it? It sounds like she's socking a ton of money away. We need to break it down. First, is Mrs. Client contributing at least 5% of her salary? 5% of $280,000 is $14,000. Yes, we've already said she's maxing at $26,000 a year. So Mrs. Client is eligible for the full 15% match. 15% of $280,000 is $42,000. If we add up Mrs. Client's contributions with her employer's contributions, we get $68,000. This is $4,500 over the total contribution limit.
Wow. Those are certainly a lot of numbers. So in your example, Mrs. Client is actually missing out on $4,500 of the employer match dollars because she is contributing too much herself. Man, so if Mrs. Client stood that, she reduces her contributions from the full $26,000 down to $19,500. She's still getting the full $63,500 of total contributions into her plan, but now she's doing it with less money from her own paycheck by ensuring she's actually receiving the full available match. Okay, so changing gears to a common confusion. Is there a different limit for traditional pre-tax 401ks and Roth option 401ks?
Another great question, Luke. No, the limit is the same, and the limit is aggregated across the plan. So what I mean by this is if you're contributing both to your 401k on a traditional pre-tax basis and also on a Roth basis, the cumulative contributions cannot surpass that $19,500 limit.
Okay. And how about those contributing to IRAs?
So the contribution limits for IRAs is much smaller. For 2020, you're allowed to contribute up to $6,000 to an IRA. Now, similar to 401k, if you're age 50 or older, you're allowed an additional catch-up contribution. That catch-up contribution for IRAs specifically is an additional $1,000. Just like 401ks, the limit is aggregated across IRAs. So contributing to both a traditional pre-tax IRA and a Roth IRA, you're limited to a cumulative $6,000. We don't have time today, but there are many other rules about eligibility and contribution limit adjustments for IRAs specifically.
Yes, there are, and perhaps we should discuss that in more in a future episode. Well, thanks for the number crunching, Matt. And that wraps up this episode. I hope you all have a wonderful Thanksgiving holiday. And remember to join us on the first and third Wednesday of each month for new episodes. Be sure to like, comment, and share to help spread the financial education. See you in 2 weeks.